Hello, this is Corner Invest. So the stock market is down massively today. Today alone, we're down around 1.8%. So why exactly is the stock market down? We're seeing a few cracks in the market today. So the PC data came out and it was slightly hotter than expected. That was the first one. And then the second one was this Atlanta Fed GDP number. So the Atlanta Fed GDP, they basically revised their GDP estimate even lower than previously. And currently we're sitting at around a negative 2.8% for Q1 of this year. And then the Michigan consumer sentiment also came out. It was a lot weaker than expected. And for the US economy, around 70% of the entire GDP is dependent on consumers. So when consumers pull back, that is when you see some sort of economic slowdown, some sort of economic condition, like what we did in 2022 when the consumer sentiment was very, very low. So at this point over here, we saw basically a crash all the way until the end of the year in terms of the stock market. Next one. So we're seeing some other cracks in the market as well. So your 10-year, 2-year yield, it's currently positive, and every single time we went positive, there's been a recession. And the time when the recession comes is when we see a very, very steep increase, which is not what we're seeing yet, but we might see it soon. So another thing is that your S&P 500 current valuation is extremely high. So the S&P 500 is currently trading at a 27 times earnings, and if you were to just look at the average over the past 20 years or so, the average is around 10 years. The average is around a 24 times, and the low point, the low estimate is around a 20 time. I would say around a 20 time is fair value, so we have a lot more downside to go for this one. Around a 20% more for it to become fair value. So we're seeing other cracks in the market as well, like how Microsoft is pulling back on data centers. That could signal your AI story that is coming to an end soon. And then you have Tom Lee being extremely bullish every single day. He's saying that the market is going to have a V-shaped recovery soon. Okay, so let's talk about temperament. So when it comes to owning stocks, you must have the right temperament. So don't be happy when stocks go up. Don't be sad when stocks go down. I don't really care what's going on with the stock market today. It's been blocked out of my system already. And market swings are normal, but you need to know that the long-term trend is up. So if you're a long-term investor, days like this shouldn't matter at all. It's just 1%. We could go down another 10%, 20%. It really doesn't matter. So today I'll be talking about some other safe haven stocks that you can have in your portfolio, as well as the entry prices for a lot of my different stock positions and high quality stock positions. So let's talk about safe haven first. So on a day like this, you have companies like Coke is up. You have companies like United Health is up as well. This is a very defensive, very durable company. And basically all your different healthcare, all your different consumer staple companies, they are up on a day like this. So when you want to construct a portfolio, if you want to construct a defensive portfolio, then you could try and have some of this consumer names, some of these healthcare names inside. But for me, I want my companies to be the extreme high quality, and that's why I'm getting hit very hard on a day like this when the stock market is down 1.8%. I'm probably down around 2% or so. So yeah, doesn't matter. We'll just continue compounding from here, and let's see where we get maybe 2 to 3 years from now. So I'll talk about my buy entries. So for Amazon over here, I recently bought at around $194. It's back to my cost basis already. And my next entry for Amazon will be around $160, $160 to $170. This will be my next buy entry. And then my ultimate buy entry will be around $140. That is where I would basically just load on Amazon. Amazon is a high quality business that is dependent on consumers, of course. That's why it's down so big on a day like this. But it is an incredibly monopolistic business, and I do believe that Amazon will be one of the winners 10 years from now. Next stock is Google. So Google has been hit very, very hard recently. Just the start of this year, it was at all-time highs, and then now we're down around 24% already. So for this one, I recently added at around $160. I would like to add at around $138. That will be my last buy entry for my full position in Google. I have quite a substantial position in Google already. So it's been a bit hard for my position, but doesn't matter. Hopefully it gets down to around $140. That will be my last entry for my full position in Google. Next one is ASML. So ASML over here is a company that's been hit really, really hard. It's down around 40% from all-time highs already. Yeah, correct. So around 40% from all-time highs already. And my next entry for ASML will be around at $550. That will be where I'll be loading into ASML. It's a high quality business, and I really want to own this company for the long term. It will definitely drop if there's some sort of economic recession, but for a quality business like ASML, buying the dip is definitely worth it. Next one is Microsoft. So Microsoft over here is currently down around 20% from all-time highs. So for Microsoft over here is currently trading at fair value. I would like to add tranches on the way down. So $340, $300 as well. All these different points, I'll try and add a few percentages here and there to Microsoft. I think it is a high quality business that I could see compounding for the next 10 years, next 20 years. So I feel comfortable holding this one even on a day like this when it is down around 2%. Next one, S&P Global. So S&P Global over here, it is a high quality business that is definitely prone to economic conditions. So that's why when there was a interest rate hike back in 2022, we saw the stock drop from around $470 to a low of $270. So that was around a 40% crash from all-time highs. But for SPGI over here, I think it is currently around fairly valued. My next entry will be around $460, followed by $415, and then $383. Hopefully it just clears all this position so that I can get a full position in S&P Global. If not, I'll just wait for this company. Next one is MSCI. So MSCI over here, it is a monopolistic business as well. It has your world indices. And for me, the next entry for MSCI will be around a $500. So I added at around $540. That was my cost basis for MSCI. I added on somewhere here, I believe. And then yeah, my next entry will be around $500. That will be where I'll be loading into MSCI, where it gives me a substantial reward for the risk that I am taking. Next one, Visa. So Visa over here, it is a company that is extreme high quality as well. In fact, I would say that Visa and MasterCard, they are the highest quality business in this entire world. And so for me, Visa over here, it is currently extremely overvalued, maybe around 20% overvalued. I would like to add it at around $290, $257. And then the next one will be around $230. Hopefully it clears all these ones. Then I will add heavily into my position. I currently only have around 3% in Visa. I would like to have a lot more Visa. As for the broad markets in general, I think the markets are they're basically preparing for a lot more downside. If we clear this bottom, then we could see a lot more downside for this stock market. And you have a weakening consumer and cracks are coming up already. So hopefully we go down. I'm not too sure, but let's see what's going on. And yeah, if you're investing in the long term, then I don't think a day like this really matters at all. Just log off and then yeah, just doesn't matter. Okay, so let's talk about when exactly you need to own your different stocks today and how to position your stock. So for growth stocks, normally you want to buy it when liquidity is high and when there's QE. So currently we're now in a QT cycle and we're ending QT soon, but QE hasn't come yet. And normally you want to buy growth stocks when the rates are low. So when rates are low, then your cost of borrowing will be extremely low, and that is when you want to buy your growth stocks. And for defensive stocks, normally you want to buy it when the liquidity is low, when there's QT, or when rates are high. And another way for you to think about it is when all this different situation happens, you should be trying to hold cash. So this is how you can position your portfolio if you want to try and trade around this. But for me, I don't see timing the market as something that anyone can do to substantial accuracy. Of course, you can do it once, do it twice, but I don't think for a prolonged period anyone can time the market. And that's why I think just staying invested and then just riding the entire wave through is the best approach to do it. Just buy high quality compounding machines, which is what I've said over here. Then just ride the entire wave up and ride the entire wave down if it ever comes. So yeah, just buy your high quality compounders, and a lot of the different high quality compounders that I'm eyeing are now currently on a downtrend. Hopefully it hits my buy entry soon so that I can get into it.